Amazing. How do I start?
You can start by opening an account with WeCopyTrade. WeCopyTrade is a platform that allows you to connect and copy the top successful traders. WeCopyTrade makes sure all your trading transactions are fair. WeCopyTrade will ensure that you can enjoy life and not worry about making big trading decisions yourself. If that sounds good to you, what are you waiting for? Start copy trading with WeCopyTrade now. Past performance does not guarantee future results. Trade responsibly. WeCopyTrade is a third-party platform, not a financial advice or a broker. Copy trading carries risks and your capital may be affected.
WeCopyTrade.
What is the Multi-Level Affiliate Partner Program? This is a 3-level passive commission program from WeCopyTrade. And here is an example. Jack is an affiliate partner of WeCopyTrade. Jack will look for new customers. Every time there is a direct customer, Jack will receive a 15% commission added to his account. And this is Leo. Leo is the sub-affiliate partner of Jack, level 1 partner of Jack. And this is Eric. Eric is a sub-affiliate partner of Leo as well as level 2 partner of Jack. After finding some sub-affiliate partners, Jack will receive commission from Leo and Eric. After Leo gets new customers and receives commission, Jack will also get 10% on the amount of commission Leo receives. After Eric gets new customers and receives commission, Jack will also get 1% on the amount of commission Eric receives. Thanks to the system of multi-level commission, Jack will always receive a great deal of commission every time AP subs successfully attract new customers. WeCopyTrade, the only platform that pays passive commissions at 3 levels to affiliate partners.
Welcome back, WeMasterTrade family. It's your boy Aiden here, and I'm beyond excited to be with you today for another incredible live session. And whether you've been with us for a while or this is your first time, buckle up because we've got a jam-packed full of insights, strategies, and the kind of tips that will take your trading game to a whole new level. So who's ready to crush it today? So let's get some love in the chat, drop your favorite emoji, hit that like button, and let me see where you're tuning in from, whether it's New York, London, or Tokyo, or anywhere in between. We want to hear from you. The WeMasterTrade community is global, and today we're all in it together. And hey, if you're not subscribed yet, you know what to do. Smash that subscribe button and stay in the loop for all the tips and tricks that will help you level up. Alright, so I love the energy already, and we've got traders tuning in from all over the world, and it's awesome to see that everyone coming to see, to share, learn and grow, and let's keep the momentum going because today's session is going to be next level. I've got some special guests here who are, there to share their stories, strategies, and I'll help them rise to the top of their game, so trust me, you don't want to miss a single word. So first up, I have the honor of introducing Sharon, an absolute beast in the Forex market. And Sharon has been mastering Forex trading for over 1.5 years, and she's here to, share some serious valuable insights with all of you. So Sharon, how's it going today?
Hi Aiden, so I feel so fantastic and thrilled to be here to discuss more about our strategy that I've been adopted. And it's a good feeling to discuss more of the successful approaches, and I'm here, so I want to eager to dive into some strategy that I've been applying the Forex market.
Love that energy, Sharon, and I know the audience is bummed to hear all about your Forex journey. But before we get into that, let's not forget about our next guest, Timmy. So Timmy has been dominating the fund trading scenes, especially in the high stakes world of crypto and stock. So Timmy, how's it going?
Hey Aiden. I'm pumped to be here as well. There's always something new to talk about in this session, and today I'm excited to share some of the strategy that that's been working with me in the fund trading. It's going to be a fun one.
That's what we love to hear. So for everyone watching, out ready because Sharon and Timmy are about to drop some serious knowledge bombs, and we'll be diving deep into the experiences, challenges, and the strategies that will help them thrive in the fast-paced world of fund trading. Alright, Sharon, let's kick things up with you. You've been trading the Forex for over a year and a half now, and I know that the Forex market can be a bit of a roller coaster. So can you tell us how you got your start in Forex trading and what led you to
Certainly, Aiden. So I began Forex trading for about 2 years ago, and I think what captivated me initially was the market vibrancies and perpetual activity. So the Forex market is exceptionally dynamic, and I was attracted to the concept that there is always potential success regardless the circumstances. And when I first discovered WeMasterTrade, it immediately resonated with me as the perfect match. So the resources they provide, just like the sophisticated technical analysis and the real-time data, they truly impressed me. So by the way, it was the community aspect that clinched for me. So WeMasterTrade places a strong emphasis on aiding traders' success by offering essential tools and support to the advanced regardless of your starting point.
That's fantastic, Sharon. It sounds like WeMasterTrade has really helped you evaluate your game. Now, Forex is known for its volatility, and sometimes that can make or break a trader. So how do you handle the ups and downs of the market without letting the pressure get to you?
Great question. So the volatility can be challenging, but it's also where the real opportunities are. So the key is that having the solid risk management plan, and I always say that you have to respect the risk. So it's important to stay disciplined, and WeMasterTrade risk management tool would help me to do that. So the real-time alerts and the customizable risk parameters would allow me to react quickly but with control. So when the market moves fast, I stay calm and trust my strategy. So not let my emotion take over. And for me, that's where WeMasterTrade features really shine.
That's some serious valuable insight and managing risk. It's definitely key in Forex trading. Now, Timmy, let's switch gears to fund trading. And I know that you've been crushing it for nearly 2 years, specializing in long-term strategies. So can you tell us what drew you to fund trading and how it differs from other forms of trading?
Absolutely, Aiden. Fund trading is all about strategic, long-term growth. It's not about chasing quick win, but building a portfolio that can grow steadily over time. What really sets fund trading apart is that you have to think both short-term and long-term. You need to manage risk carefully while keeping an eye on out for opportunity as they arise. WeMasterTrade real-time data and analysis tools have been essential for they help me make informed decisions that are aligned with my long-term strategy, even when the market grows.
Okay, so I love that fund trading seems like it requires a lot of patience and thought. To me, how do you stay focused on the bigger picture, especially when the market gets rocky?
Patience is everything in fund trading. The market will always have its up and down, but you can let short-term fluctuation dictate your long-term strategy. One of the biggest lessons that I've learned is to stay emotionally neutral. Don't get too excited when things are going well, and don't panic when the market dips. WeMasterTrade risk management tool help me stay disciplined even when things get volatile. I can set precise risk parameter and have peace of mind knowing that I'm not overexposed, even when the market is acting unpredictably.
That's such solid advice. Keeping your emotions in check is definitely a big part of being successful in trading. But we have shared, some serious gems so far. But let's talk about the tools that help them get to where you are today. So Sharon, can you share one specific features on WeMasterTrade that has been a game changer for you?
Definitely a tool I absolutely rely on this account is the insight features. So it offers up to minute data on how my account is performing, and I use this to observe the patterns, evaluate my trades, and make the better informed decisions. And whether I'm pinpointing to the best time to enter to the market or deciphering the market trends, this tool will help me to give me to an edge, right? And it has enabled me to spot the approach opportunity that I might not have noticed otherwise.
So that sounds like a total game changer, having that insight is crucial, especially when you need to make quick decisions. So tell me, how about you? What's been your go-to tool in fund trading?
For me, it's all about the risk management tool. They allow me to customize the amount of risk I'm willing to take on any trade. This has been key for me, especially in volatile market like crypto. WeMasterTrade have to stay disciplined and in control, ensuring that I never take on more risk than I'm comfortable with. That what keep me grounded, even when the market is going right.
Risk management seems so important, especially in today's fast-moving market. And whether you're in Forex or fund trading, having the right tools makes a world of difference. And I hope that everyone watching is taking notes, because Sharon and Timmy are dropping some serious pro-level insight today. Alright traders, we're things up enough. It's time to dive into one of the most powerful features here at WeMasterTrade, the package comparison. So whether you're a fresh paid newbie, eager to get your feet wet, or a seasoned pro looking to scalp to new highs, this section is for you. This is where you find the perfect trading package to match your goals and take your trading from good to great. Now, let's be clear, here at WeMasterTrade, we know there's no one size fits all in trading. Every trader is unique with different styles, risk tolerance, and strategies. So that's why we offer multiple customizable packages to meet you exactly where you are in your trading journey. Whether you're aiming for high risk and high rewards, or you prefer the steady, methodological approach, there's something here for you. And to break it all down, of course, the awesome Sharon and Timmy, two of WeMasterTrade finance, they both work closely with these packages and are here to give us the insights good on how to leverage each one till its full potential. Alright, let's jump in. Sharon, you've been with WeMasterTrade for a while, and you've been seeing firsthand how these packages can evaluate your experience. So can you kick things up by walking us through how both new and experienced traders can benefit from the package comparisons, and what is such a game-changing feature of WeMasterTrade experience?
Absolutely, Aiden. So I really enjoy discussing these packages because it's where traders can truly customize their experience. So the package comparison feature simplifies the process for traders to understand precisely what they are getting, right? So when you visit a website, there's a detailed and it will lead to a table of the packages, which will compare the different types of package that we provide. So for example, there was some information just like the initial balance, the profit targets, the total loss and the daily loss, and so on. So all the essential details are presented in this straightforward, easy to navigate table, and it's all structured to assist traders in selecting the best tool for their success. And I think let's talk about first with the standard packages. I think that the most popular package that every traders, when they reach to us, they think that would fit them. So this is a great one for who got the experience already, and it will get you the plenty of room to trade. So you can start up with $200,000 package. All right. So the profit target is set at 6%, and the daily loss is capped at 4%. And next, you can see that the total loss is at 6%. So from that, you got enough breathing room to get in the market swing without sweating too much. And it's an awesome balance between opportunity and security.
So, so that sounds like a perfect stepping stones for traders looking to level without jamming in too deep or too quickly. A 200,000 balance and a solid 6% profit target give you a ton of flexibility to build momentum. But for those who are looking for something a bit more thrilling, let's talk about the 5, 10, 10 package. I think this one is a favorite for high risk, high reward traders. So what makes the 5, 10, 10 such a standout?
Well, a 5, 10, 10 package. So now we are talking big play. So this one is quite the same with the standard package. All right. So it will be you can start at $200,000, but now the risk would be different. So the daily loss cap will be 5%, and the total loss will be 10%. But now the profit target will be higher. It will be 10%. So you can see that the higher the better the risk, the higher profit target you need to reach. So this is perfect for traders who have confidence in their trading strategy and looking to make more major gains. So it's all about having the high tolerance in the risk in exchange for the bigger payouts.
Now that's what I'm talking about, a 5% loss cap and a 10% profit target. That's definitely for traders who want to go big and swing for the fences. But what if someone looking for something, more relaxed? Maybe they want something simpler without all the pressure of hitting specific targets. So to me, I've heard about the 5-10-0 package, so can you break it down for us?
Absolutely. The 5-10 euro package is ideal for traders who want a straightforward, no-nonsense approach. You start with a $100,000 balance, but here the cool part that there's no profit target. You can trade freely without the stress of hitting the specific percentage. It's just you, the markets, and your strategy. The daily loss cap stayed at 5%, giving you some structure. But the beauty here is that allows traders to focus on consistency without worrying about a specific goal.
So that sounds like a dream for traders who just want to try without all the restrictions, total freedom, no pressure, just you and the market. Now, to me, what about those traders who want a bit more control over their risk management, but still want to play in that high stakes arena? So what can you tell us about the 5-10-10 no PC package?
The 5-10-10 no PC package is perfect for traders who want more control over their trades. You still get the $25,000 starting balance at 5% daily loss cap, but the flexibility is the real selling point here. This package allows you to tweak and adjust your trading parameter to match your trading style and risk management preferences. Whether you are reacting to market change or want to experiment with different strategies, this package gives you the freedom to adapt without losing the safety nets of risk management.
So flexibility and control in a volatile market, that's huge, and I love how these packages are giving traders more ways to adapt and grow. Now we'll cover a lot, but I've been hearing a whisper about something really special, the custom package. So Sean, tell us, what makes this one so exciting?
Well, for the customized package is where things get really exciting. So this is for traders who want it all. So full control, full customization, and a massive starting balance. So you will get dropping $1 million initial balance. Yes, $1 million, but that's just not to be just beginning, right? The real beauty is that you can customize everything, just like the day loss limit, the overall loss limit, and even your profit target. And also you will have some add-on feature that would have not included in the other packages. So it's perfect for traders who know exactly what they are doing and want to craft the trading experience that matches their exact needs, and it's ultimate freedom and control. So I think that's a good one for them.
$1 million starting balance and the ability to customize your entire trading experience. That's next level trading. And whether you're a high risk taker or a methodical trader, the custom package sounds like the ultimate playground for those who want to take the trading to the stratosphere. Alright, traders, let's quickly recap. So whether you're just starting with the standard package, going for bigger rewards with the 5-10-10 package, or enjoying the full freedom with 5-10-0, or just taking control with the 5-10-10 no PC, or choose to customize everything with the custom package, WeMasterTrade has the perfect option for you. So the only question is, which one is calling your name? Head over to the package comparison section on our website right now and check it out for yourself. We've got packages designed to fit every trader, no matter where you are in your journey. Let us know in the chat which package speaks to you, and our team is ready here to get you started. The future of fund trading is in your hands, so let's make it happen. Alright traders, so this is where the magic happens. We'll talk about the packages and how you can jumpstart your trading journey with WeMasterTrade. But let's be real, success in trading isn't just about the package that you choose. It's also about the understanding and sticking to the rules. So the conditions that we have set at WeMasterTrade are designed to not only keep you safe, but to help you grow and take your strategy to the next level. And now you're just getting started or you've been trading for years, the condition will act as your roadmap. So So let's dive into the tools that define our trading environment, because if you understand it, you can master the game. So first on the list, and arguably one of the most important here, so that would be the daily loss limit. So Sharon, could you break that down for us?
Well, absolutely, Aiden. So the day loss limit is one of the most essential protection any traders can employ. So it serves a daily circuit breaker to prevent you from suffering significant losses on the challenging day. So the concept is straightforward. There is a limit to how much you can lose on a single day trading, and it's determined by the greater of two values: your account balance and your current everyday at the beginning of the day. So let me break down with an example so everyone will understand it clearly. So let's take at the example 1. Let's say that you've got a balance of $105,000, but due to some open trades, your equity, including the floating and the losses, is $107 at the start of the day. So if you are working with the package at 4% of the daily loss, so it means that you can lose up to $4,000, right? And if your equity falls below $103,000, your account is closed. And let's take another example on the flip side. So if your account balance is $100,000, so and your equity is a little bit lower, like $99,000, right? So the same 4% of loss limit would mean that your account will be closed if your equity dips below $96,000. So the point is, the day loss limit is there to make sure that a bad day doesn't whip you out completely. So it's about to protecting your account and giving you the chance to regroup and come back stronger on the next day.
So got it. So it's like an insurance policy for your trading day. You hit that limit and boom, you're out before things get out of hand. But what happens if a trader accidentally crosses that line? So can they keep trading?
No, if you hit the day loss limit, your account will be automatically terminated. So all of your position will be closed and you won't be able to trade again until you buy another package. So here's the thing, that the liquidation is not automatic and immediate. So it's designed that way to prevent further losses. But here's a word of caution: the market fluctuation can sometimes cause you to lose a bit more than limit. So depending on how fast the market is moving.
Oops, so it's a hot stuff. Definitely some traders should keep an eye on to avoid. And now that we understand what the daily loss limit is and what happens when it hits, so the next question is how to avoid hitting that limit in the first place. So Timmy, you've been in the trading trenches for years, and can you share some practical strategies that trader can use to stay within the daily loss limits for all years?
Okay, you got it, Aiden. Staying within the daily loss limits is all about being disciplined and following a solid risk management plan. Here's a few key strategies that have worked wonder for me and countless other traders. First, and I can't stress this enough, always use a stop loss. I know it sounds simple, but it's absolutely critical. The stop loss ensures that if the market moves against you, you are out of the trade before things get out of hand. Think of it as your safety net.
So that's setting up guardrails on a mountain road, right? It's to stop you before you go off the cliff.
Yeah, exactly. The extra layer of protections. Now the second strategy is position sizing. This is where a lot of traders slip up. You should never risk too much on a single trade. A good rule of thumb is to risk no more than 1 to 2% of your account balance per trade. This way, even if the trade doesn't go your way, you're still far from hitting your daily loss limit, and you can keep trading without any major setback.
So it's a building your defense. You don't put everything on one play. You spread out the risk. Makes sense. But what about those moments when traders feel tempted to chase after losses? Trying to get it all back in one trade.
Oh, that's a big one, Aiden. Chasing losses is one of the biggest mistakes traders make, especially newer one. This brings me to my third strategy, that is don't chase the losses. If you're having a tough day, take a step back. The market will always be here tomorrow. If you start chasing losses, trying to recover too quickly, it's easy to make emotional decisions that lead to even bigger losses. And before you know it, you already have the daily loss limit. Yes.
So true, it's like trying to sprint when you're already winded, you're more likely to make a mistake. Now, to make these strategies sound spot on, but how do traders stay mentally strong when things aren't going their way? What keeps them from falling into that emotional trap of chasing losses?
It's all about mindset, Aiden. Trading is as much as a mental game as it's a number game. You gotta stay calm and focused. One trick is to always have a trading plan before you even play a trade. That way when things get tough, you stick to the plan and avoid making impulsive moves, and if you find yourself getting emotional, just stop, take a break, step away from the screen and reset your mind.
Thank you, Timmy, for those incredible tips on managing daily loss. Now let's shift our focus to another critical element of risk management, the maximum loss limit. So this limit is like your long-term safety net, ensuring that you don't deplete your account over time. These are unlike the daily loss limit, which resets at the end of each day. The maximum loss is cumulative, so when you reach it, your account will be locked and your trades will be closed. So to deep dive into this, let's discuss how the maximum loss limit works, how it's calculated, and why it's so essential for traders at every level. Whether you're a new trader looking to minimize risk or inexperienced traders scaling your strategies, this limit ensures that you don't go beyond a point of no return. So Sharon, I know that you've got some great insight into the mechanics of the maximum loss limit, so can you walk us through how this rule works and what traders need to keep in mind as they plan their trading strategies?
Of course, Aiden. The maximum loss limit is the vital rule that's often overlooked but extremely important. So essentially, it's there to prevent traders from experiencing catastrophic losses by capping how much you can lose across the life of your trading account. So let's break it down. The maximum loss limit ensures that your account equity never falls below 94% of the initial balance. So assume that you have the package offer the total loss of 6%, right? So if you start a balance at $50,000, your account will be closed once your equity falls to $47,000. So that's the total allowable loss of $3,000. So, however, it's not all bad news. So if you start making profits, and the limits will adapt, giving you more breathing room as your equity grows. So let's take an example. If your account balance increased to $52,000, and you've now made $2,000 in profits, right? So your new maximum loss limit would then allow you to lose up to $5,000 as you are essentially locking those gains. So the maximum loss limit acts as a long-term safeguard, and it is designed not only to protect your account but also encourage disciplined trading by setting boundaries. And the goal is to ensure that you don't dig yourself into a hole that's too deep to recover from. So here are some specific examples. So the case one, let's say your account balance started at $50,000, but your equity dropped to $49,000. So due to some market losses, right? So you are allowed to lose another $2,000 before your account hit the total loss and it closed. And the second case, that now you are doing well and the equity rises to $51,000. So you've got some extra cushion, and at this point you are allowed to lose up to $4,000 before your account hit the same $47,000 limit. So the calculation, so to figure out where you stand, the maximum loss limit is calculated by adding the sum of your closed positions and factoring in any open position that are still running. So your trading dashboard will show two key factors. That's the max permitted loss, so how much you can lose overall, and another one is the remaining loss, the loss left before your account is closed. So what happens if your account reaches limits? So unfortunately, it's quite the same with the daily loss. If your equity hits the maximum loss limits, the system will automatically terminate your account and all of your position will be liquidated, whether you are in the profitable or not, and you are unable to trade until you buy another account. Yeah, that is how the maximum loss limit works.
Things shown does definitely help clarify the nuts and bolts of the maximum loss limit. So it's kind of like a safety first, isn't it? It's to keep you from spiraling out of control, especially when markets get volatile. Now, I imagine this rule impacts different traders in different ways. So whether you're a cautious trader who keeps their risk low or a more aggressive trader trying to maximize profits, that this limit is one of those things you can't afford to ignore. So let's bring in Timmy, our risk management expert. So Timmy, what do you think are the most common mistakes traders make when it comes to managing their maximum limits, and more importantly, what strategy can trader implement to ensure that they never got too close to it?
That's a great question, Aiden. You're absolutely right. No matter what type of trader you are, ignoring the maximum loss limit can be costly. In fact, it's one of those things that sneak up on traders who aren't paying attention to the long-term picture. And I would say that the most common mistake is underestimating how quickly cumulative losses can add up to over multiple trades. Here is some key strategy that I recommend to stay well within your maximum loss limit. First is to set your stop loss order on every trade. This is your first line of defense. Setting a stop loss means you deciding in advance that how much you're willing to lose on a particular trade. The system will automatically close your trade if it hits that number, which protects you from letting a losing trade get out of hand. For example, if you are willing to lose $500 on a particular trade, you set that as your stop loss and you won't have to worry about it spiraling.
So I love that it's like putting a safety belt on each trade. When you're looking at stop loss, it's out of your hands.
Exactly, Aiden. It's all about disciplines. The second tip is to manage your position sizing. This is a very big one. Often traders, especially the newer ones, get carried away by putting too much capital into one single trade. But when you risk too much, you also risk losing a larger percentage of your account if the trade goes out. A good rule of thumb is to risk no more than 1 to 2% of your total account balance on any single trade idea. For example, if your account balance is $50,000, you should only risk from $500 to $1,000 per trade. This keeps your potential losses manageable and well within your limit.
So that makes total sense. You're not putting all of your eggs in one basket and it gives you more room to breathe there.
Exactly. It's all about spreading the risk so you don't have to take a big hits on any one trade. So the third tip will be to monitor your account equity regularly. This may sound basic, but it's incredibly important to keep an eye on your account equity throughout the day. It's easy to get caught up in the market's high and low, but you should always be aware of how close that you are to your maximum loss limits. Your dashboard makes it easy to check your remaining losses. To use, if you see that you're getting close to the limit, it's time to take a step back and evaluate your strategy.
So it's like having a roadmap where you know where you're going and you have the contingency plans for when things don't go as expected.
Exactly. No one wants to get stuck on the side of the road. Create and stick to a trading plan having a well thought out on trading plan is one of the most powerful tools in a trader arsenal. This plan should outline not only your profit goal but also your risk management rule. For example, if you have a few losing trades in a row, does your plan tell you to take a break, reassess, or change your strategy? The idea is to have a preset series of rules that you don't have to make an impulsive decision in the heat of movement.
So thank you for your fantastic breakdown of the maximum loss limit challenge in 10 weeks. So next off, we're going to enter a short break, and after we're going to continue with some of the conditions we cannot yet discover and the promotion plan that we're currently running.
What is the multi-level affiliate partner program? This is a 3-level passive commission program from WeCopyTrade. And here is an example. Jack is an affiliate partner of WeCopyTrade. Jack will look for new customers. Every time there is a direct customer, Jack will receive a 15% commission added to his account. And this is Leo. Leo is a sub-affiliate partner of Jack, level 1 partner of Jack. And this is Eric. Eric is a sub-affiliate partner of Leo as well as level 2 partner of Jack. After finding some sub-affiliate partners, Jack will receive commission from Leo and Eric. After Leo gets new customers and receives commission, Jack will also get 10% on the amount of commission Leo receives. After Eric gets new customers and receives commission, Jack will also get 1% on the amount of commission Eric receives. Thanks to the system of multi-level commission, Jack will always receive a great deal of commission every time AP subs successfully attract new customers. WeCopyTrade, the only platform that pays passive commissions at 3 levels to affiliate partners.
WeCopyTrade.
John always wanted to invest, but because he works full-time at the office, he never found enough time to learn how to do it. He missed out on investing in Amazon. He missed out on investing in Bitcoin and gold.
Because he didn't understand the market. But now, he started trading because he found WeCopyTrade.
It is a social network for traders that allows him to skip the years of learning the financial market and copy the most successful investors. He checks top profiles to see their success rates, returns, and risk assessment, and then he chooses to copy. It automatically mirrors all of their investments. So if they get a 10% return, he gains a 10% return as well. Investment news will be updated and shared on the traders community and social network so that he can keep track of all the market information.
WeCopyTrade.
At WeCopy FinTech Inc., we are proud to be one of the leading companies in the field of marketing and technology. Established in 2024, our mission is to provide breakthrough marketing and technology solutions, helping customers improve business efficiency and reach their target audience in the most effective way. Our motto is quick, economical, and efficient. We provide a wide range of services from UI/UX design, web development, mobile development to IT outsourcing. We are proud to have cooperated with hundreds of customers globally, bringing remarkable success to their projects. Let WeCopy FinTech Inc. make a difference for you. Contact us today.
WeCopyTrade.
Are you struggling with trading in the financial markets? Losing money as well as losing sleep every night because you don't have the time for research to keep yourself updated. The lack of experience and knowledge is the reason for your poor performance. Don't worry. I might be able to help you.
How? And who are you?
They call me WeCopyTrade. Now let me introduce you to John and his friends. They are all professional traders. They spend years trading, investing, and researching the market.
Okay, so how can you help me?
With my help, you can now connect to John and his friends and copy all their strategies.
Oh, how will this work exactly?
Oh, it's very simple. You just begin to follow John or any trader that you trust. If that trader opens a trade, that same trade will be opened in your account. And if that trade makes a profit, yours will too.
But I want to remind you that I don't have the time and experience.
You don't need to have any experience to copy trade. You can spend your time doing your favorite activities while John and his friends are doing all the work for you. You can manage your risk and view your trading records anywhere on your laptop or mobile device.
This is amazing. How do I start?
You can start by opening an account with WeCopyTrade. WeCopyTrade is a platform that allows you to connect and copy the top successful traders. WeCopyTrade makes sure all your trading transactions are fair. WeCopyTrade will ensure that you can enjoy life and not worry about making big trading decisions yourself. If that sounds good to you, what are you waiting for? Start copy trading with WeCopyTrade now. Past performance does not guarantee future results. Trade responsibly. WeCopyTrade is a third-party platform, not a financial advice or a broker. Copy trading carries risks and your capital may be affected. WeCopyTrade.
What is the Multi-Level Affiliate Partner Program? This is a 3-level passive commission program from WeCopyTrade. And here is an example. Jack is an affiliate partner of WeCopyTrade. Jack will look for new customers. Every time there is a direct customer, Jack will receive a 15% commission added to his account. And this is Leo. Leo is a sub-affiliate partner of Jack, level 1 partner of Jack. And this is Eric. Eric is a sub-affiliate partner of Leo as well as level 2 partner of Jack. After finding some sub-affiliate partners, Jack will receive commission from Leo and Eric. After Leo gets new customers and receives commission, Jack will also get 10% on the amount of commission Leo receives. After Eric gets new customers and receives commission, Jack will also get 1% on the amount of commission Eric receives. Thanks to the system of multi-level commission, Jack will always receive a great deal of commission every time AP subs successfully attract new customers. WeCopyTrade, the only platform that pays passive commissions at 3 levels to affiliate partners.
WeCopyTrade.
John always wanted to invest, but because he works full-time at the office, he never found enough time to learn how to do it. He missed out on investing in Amazon. He missed out on investing in Bitcoin and gold.
Because he didn't understand the market. But now, he started trading because he found WeCopyTrade.
It is a social network for traders that allows him to skip the years of learning the financial market and copy the most successful investors. He checks top profiles to see their success rates, returns, and risk assessment, and then he chooses to copy. It automatically mirrors all of their investments. So if they get a 10% return, he gains a 10% return as well. Investment news will be updated and shared on the traders community and social network so that he can keep track of all the market information.
WeCopyTrade.
At WeCopy Fintech Inc., we are proud to be one of the leading companies in the field of marketing and technology. Established in 2024, our mission is to provide breakthrough marketing and technology solutions, helping customers improve business efficiency and reach their target audience in the most effective way. Our motto is quick, economical, and efficient. We provide a wide range of services from UI/UX design, web development, mobile development to IT outsourcing. We are proud to have cooperated with hundreds of customers globally, bringing remarkable success to their projects. Let WeCopy Fintech Inc. make a difference for you. Contact us today.
WeCopyTrade. Are you struggling with trading in the financial markets? Losing money as well as losing sleep every night because you don't have the time for research to keep yourself updated? The lack of experience and knowledge is the reason for your poor performance. Don't worry. I might be able to help you.
How? And who are you?
They call me WeCopyTrade. Now let me introduce you to John and his friends. They are all professional traders. They spend years trading, investing, and researching the market.
Okay, so how can you help me?
With my help, you can now connect to John and his friends and copy all their strategies.
Oh, how will this work exactly?
Oh, it's very simple. You just begin to follow John or any trader that you trust. If that trader opens a trade, that same trade will be opened in your account. And if that trade makes a profit, yours will too.
But I want to remind you that I don't have the time and experience.
You don't need to have any experience to copy trade. You can spend your time doing your favorite activities while John and his friends are doing all the work for you. You can manage your risk and view your trading records anywhere on your laptop or mobile device.
This is amazing. How do I start?
You can start by opening an account with WeCopyTrade. WeCopyTrade is a platform that allows you to connect and copy the top successful traders. WeCopyTrade makes sure all your trading transactions are fair. WeCopyTrade will ensure that you can enjoy life and not worry about making big trading decisions yourself. If that sounds good to you, what are you waiting for? Start copy trading with WeCopyTrade now. Past performance does not guarantee future results. Trade responsibly. WeCopyTrade is a third-party platform, not a financial advice or a broker. Copy trading carries risks and your capital may be affected.
WeCopyTrade.
What is the multi-level affiliate partner program? This is a 3-level passive commission program from WeCopyTrade. And here is an example. Jack is an affiliate partner of WeCopyTrade. Jack will look for new customers. Every time there is a direct customer, Jack will receive a 15% commission added to his account. And this is Leo. Leo is the sub-affiliate partner of Jack, level 1 partner of Jack. And this is Eric. Eric is a sub-affiliate partner of Leo as well as level 2 partner of Jack. After finding some sub-affiliate partners, Jack will receive commission from Leo and Eric. After Leo gets new customers and receives commission, Jack will also get 10% on the amount of commission.
So welcome back everybody, and so now we're going to enter the next topic, so the profit consistency rule. So I believe that this rule is crucial when it comes to ensuring long-term sustainable success in trading, and it helps maintain, measure, and your profits, be consistent in your profit. So now to give a clear picture of how profit consistency rule works and why it's so important, let's turn into Sharon. So can you break the rule down for us and how it is calculated and why it is so important, for traders to focus on their consistency rather than just aiming for bigger wins?
Of course, Aiden, the profit consistency rule is the powerful metric that helps you understand how stable your profits are over time, and it's just about making big gains on 1 or 2 good days. It's about being consistent day in and day out. So here is how the profit consistency rule is calculated. You will take your highest profit of all trading day and divide it by the total of your all profit and losses over the given period, usually a month or a quarter, and you then express the result in the percentage. So let's go through an example. Say that your best day brought to $200 in profit, but over the month, your total profit and losses add up to $410. So in that case, your profit consistency ratio would be about 47%, and this ratio shows how much your performance becomes from one standout day. So ideally, you want this percentage to be lower. So for most packages as we're offering now, the profit consistency is 20%, so it should be under 20%, because that means that your profits are more evenly spread out across all trading days. So why is it important? A low profit consistency ratio indicates that you are not just relying on the couple of big wins to stay profitable. Instead, you are showing that your strategy works consistently over time, and even on those days when the market isn't giving you big wins. So this kind of consistency is a hallmark of the successful and long-term for traders.
So that's a great explanation, Sharon. So just to clarify, a low ratio means that you're more likely to make steady gain rather than being overly dependent on a few good days, right?
Yes, Aiden. So when you are too reliant on a few big wins, it often means that your strategy is risky or inconsistent. So you could go through long stretches where you are not making much money or even losing it. So, but if your profit consistency is low, it shows that your performance is smoother and that your trading strategy is more predictable and stable over time.
So that's incredibly insightful, and it seems like a critical metrics for any traders who are serious about long-term success, right?
Exactly, the consistency is the key to sustainable profitability. So big wins are great, but if they followed by big losses or long periods of break-even trading, it's hard to maintain the momentum. So with the profit consistency rules, traders can keep an eye on how reliable of their strategy is over time.
Awesome, so now we got a solid understanding of what the profit consistency rule is. So let's dig into some practical strategies to actually help maintain a low ratio, easily under 20%. So Timmy, I know that you've got some great tips for us, and can you work through some of these techniques that trader can use to stay consistent and ensuring that their ratios stay in check?
Yeah, absolutely, Aiden. The profit consistency ratio is the powerful indicator, but it takes careful management to keep it low. So let's talk about some practical way trader can improve their consistency and avoid becoming too dependent on the rare pick win. The first one is to diversify your trade. One of the most effective strategies is to keep your profit consistency ratio low is to diversify your trade. This means spreading your investment across different market asset classes or even trading strategy. If you only trade one market, say let's say Forex or stock, you risk being reliant on that market performance. By diversifying, you reduce the impact on any single losses and create more stability in your overall performance.
That makes a lot of sense if, I'm only in trading. Let's say in the US stock market, a bad week could really hit my profit consistency, huh? But by, adding trades in, for example, commodity or Forex, I could balance some of that risk, right?
Yeah, exactly, Aiden. It's all about the balance. When one market isn't performing well, another market may be doing better. This way, your overall performance stays smoother, and you are not relying on just one or two trades to pull you out. You rule. The second strategy will be manage your position sizing. Next up, one of the biggest mistakes traders make is over leveraging. Take on positions that are too large relative to the account balance. For example, you have a $10,000 account, putting $5,000 into a single trade is risky because if that trade goes out, you could lose significant portions of your capital. Instead, aim to keep your position size small and manageable, say no more than 1 to 2% of the account balance per trade. This reduces your risk and help to ensure that losses don't overwhelm your profit.
But so it's not just about picking the right trades, but also making sure that you are not putting too much of your capital on risk on any single trade, right? So more smaller and controlled trades lead to steadier results over time, right?
Yeah, exactly. By managing position sizing, you prevent any single trade from having too much impact on your overall performance. It's all about control and disciplines. So the third strategy will be implement a clear trading plan. Another crucial element is having a well-defined trading plan. Without a trading plan, it's easy to get caught up in the emotions of trading, whether that excitement of a potential win or panic of a sudden losses. A solid plan outlines exactly when you will enter a trade and when you exit, or how much you risk and you're willing to take. Having this rule in place keeps you grounded and help to ensure that your trading decisions are consistent, which in turn help keep your profit consistency ratio in check.
That's a really good point. A lot of traders, especially new one, probably jump into trades without a solid plan and end up making emotional decisions, right?
Yes, absolutely right, Aiden. It's so easy to get emotional and in the heat of the moment, but if you have a plan, it's much easier to stay disciplined and avoid impulsive trade that could hurt your performance. So the next strategy that I use is to bring on a stop loss order. A stop loss is automatic access your setup to flow a trade if it's moved against you. This helps you to cap your losses on any single trade idea and protect your account balance. By using a stop loss order, you can avoid those catastrophic losses that can roll off your profits consistency.
So I like the idea of using stop loss orders. It sounds like a way to take emotions out of the decision-making process.
Exactly. It's like setting a safety net. Once your stop loss in place, you don't have to worry about watching the trade 24/7. If things go south, the stop loss takes you out of the trade automatically, helping you stick to your plan and avoid large unexpected losses. So the next strategy that will that I use is to regular monitor and adjust. And, just because you set up solid plan and strategy doesn't mean you should put everything on autopilot. It's crucial to check your trades, see what is working, and make adjustments as needed. You need to find that certain market or strategy are delivering more consistent results than others. By keeping a close eye on your performance, you can tweak your approach by improving consistent over time.
So is it performing maintenance on your trading strategies, or are you looking for ways to optimize and improve?
Yeah, just like a car needs a regular tune-up, your trading plan does too. Continuous improvement is key to keep your profit steady. The next strategy that I use is to avoid emotional trading. Whether it's fear after a loss or overconfidence after a win, emotion can lead to a poor decision making. If you stick to your trading strategy and avoid trading losses or getting overly excited after a good day, you will see much more consistent results.
That's such an important point. Staying calm and disciplined, even when things are market going crazy, it's easier to said than done, though, right?
Yeah, it's definitely take practice, but staying level-headed is crucial for long-term success. If you can control your emotions and stick to your plan, you will be far more likely to maintain the consistent profit.
Alright, so trader, let's dive into another crucial aspect of effective trading, the risk consistency rule. So this rule is key to maintaining volatility and long-term volatility of your trading account. So tell me, I know you've got a great way of explaining it. So can you walk us through what the risk consistency rule is and what is so important for a trader to follow?
Sure thing, Aiden. The risk consistency rule is all about ensuring that you manage your risk in discipline, consistent manner. Is limit the risk per trade to no more than 2% of your initial balance. This is really important because it prevents loss swing in your equity and help mitigate the risk of significant losses due to sudden market movement or unexpected events. Let's break it down a little bit more. Maximum risk per trade idea. You shouldn't risk no more than 2% of your initial balance on any single trade idea. This includes any floating losses, so you need to factor in own potential exposure. The second one is the trade idea definitions. Multiple trade on same assets in the same directions are considered a single trade idea. On the other hand, trade on different assets or opposite directions are treated as a separate idea. For example, if you open several positions on gold buy, they would count as one trade idea, and the combined risk must remain under 2%. If you have a gold buy and a GBP JPY sell, they are treated as two separate trade ideas. It's with their own 2% risk limit. Following this rule smooth out your equity curve, encourage disciplined trading, and most important, to reduce the chance of massive losses.
Thank you, Jimmy. And next up, we are going to, enter the promotions, all the plan that we are currently running. And, our vision is to foster a thriving community of elite professional traders, and positioning WeCopyTrade.com as a go-to platform for anyone serious about advancing their career. Whether you're just getting started or have years of experience under your belt, we are committed to providing opportunities and resources that help you succeed at every stage of your trading journey. At WeMasterTrade, we understand that each trader needs are different, and we are here to support you, with tools, insight, and personalized packages that cater to your specific trading goal. And if you're ready to, take your trading to the next level, you definitely want to stick around to hear about the exciting offers that we've got lined up. So the new promotion plan that we'll be unveiling today is specifically designed to help traders get more out of their experience with WeMasterTrade and WeCopyTrade.com, and we are focused on creating opportunities for growth, increased profitability, and the long-term success no matter where you are on your trading journey.
With that said, let's jump into our first promotion, which is exclusively available for WeMasterTrade affiliate partners, so the AP0 package. So this package is designed to help you unlock even greater potential with WeMasterTrade, offering unique benefits and features that can really boost your performance. So let's talk a little bit about the package. The AP0 presents an incredible opportunity tailored specifically for our WeMasterTrade affiliate partners. So here are the key details. The package is named as AP0, costs just $3 and falls under the 5100 package and comes with an account balance of $30,000. So to qualify this package, customers need to complete the KYC process and sign up with our affiliate partner program, so which will help create a secure and compliant trading experience for all participants. So when it comes to the payment terms, the profit sharing allows you to earn a 50% of the profit. For instance, if you generate 10% of the profit amounting to $3,000, right? So your potential share could be up to $1,500. So you can acquire as many packages as you wish. However, only one can be active at one time. So after closing an account, you are eligible for a new package. There are no limits on the number of payments that you can receive, but keep in mind that the accounts hitting the payment threshold cannot withdraw funds until the certain customer referral conditions are met. So I think this package is a fantastic way to kickstart your trading journey with a significant balance while minimizing your initial investment, so making it perfect for those who want to explore our platform and reduce the financial risk.
So next up we have our Trade Week Pay Small promotion, a fantastic option for traders who want to maximize their capital with a minimal initial investment. So Timmy will help us learn more about this promotion.
Yeah, sure. The Trade Week Pay Small allows you to purchase a capital package valued as $100,000 for just $250. Yes, you heard that correctly. $100,000 for only $250. This is incredibly opportunity to maximize your trading potential without a hefty upfront investment. Here's how to take advantage of this amazing offer. First, you gotta need to log into your WeMasterTrade account and navigate the main page. There, you click on the Customize package, and you will be then prompted to select the type of account you want to open, whether it's crypto, forex, or stock. After making your choice, enter $100,000 as your initial balance. To ensure that you retain this special offer, be sure not to select on any add-on during this process. Finally, complete the payment to finalize your package. And remember, this offer isn't limited to just $100,000. With WeMasterTrade, you have the option to start with an initial balance of $1 million for only 0.25% of the capital amount. This flexibility allows you to scale your trading significantly while keeping your initial investment low. Don't miss out on this fantastic opportunity.
Thank you, Timmy. And now next up we're fantastic, to share some of the promotion with you today, including our special giveaway and the highly popular BOGO, or known as buy one get one for free promotion. So let's first dive into the special giveaway that we host on our social media accounts. So to ensure that you don't miss any updates about the giveaways, make sure to follow us on all of these social media platforms with a particular focus on the X platform, where we can share the latest announcements and details. So now, Sharon, could you tell us a bit about what participants can expect from this giveaway and how can they get involved?
We regularly host exciting giveaway programs, and qualifying for them is easy. So all you need to do is to follow us and engage with our content by liking, sharing, and commenting. So you could be one of the lucky winners, one of the 3 510 accounts, each value with the expressive balance of $25,000. So these accounts will be awarded to participants who garner the highest number of likes and reposts on our giveaway post. So the more you engage, the better your chances. So our most recent campaign concluded on August 10th, but don't worry, there will be more opportunity ahead. So make sure to follow us closely to catch all details on the next giveaway. So we want to emphasize that these giveaways are our way to expressing our gratitude to our community for its ongoing support and involvement. So your engagement means a lot to us. So stay connected, participate actively, and don't miss out your chance to win some incredible prizes.
Now moving on to one of our most popular promotions, the BOGO, or known as buy one get one offer. So this is an incredible opportunity for traders who want to maximize their trading power without an additional cost. So tell me also how it works.
When you purchase a $50,000 trading account, you will receive an additional $25,000 account absolutely free. This gives you the opportunity to enhance your trading experience with even more capital at your trading disposal. Instant funding, there is no waiting period. Your account will be funded instantly, allowing you to start trading right away. Risk management benefit, you can enjoy a daily drawdown limit of 4% and a maximum drawdown limit of 6%. Additionally, the profits target is set at 6%, which provides a balanced risk management and profit opportunity. Open to all traders. This offer is available to all traders regardless of their experience level. However, keep in mind that this is a limited time offer, so don't miss out on your chance to take advantage of it. To claim any of this fantastic offer, follow this step. First, you have to log into your account and purchase any package with a payment fee of at least $125. Sign the e-contract for the account that you have already purchased, and then contact our customer service agents assistant in verifying your payment and creating the free account for you. When everything is processed, your free bonus account will appear in the personalized sections of your dashboard within 24 hours. All you need to do is log in and activate your account. You will be all to start trading.
So we hope that you're as excited about these promotions as we are. So now we're going to continue with the economic analysis of today.
All right. So let's take a deeper insight of today's economics calendar. So the very first one, that is the FOMC member category speak. So the impact is just like the yellow pack, it's just low to moderate. And for the market impacts for investors and the traders, so investors in the US equities and the bonds may closely follow Kashkari's remarks. If he suggests that inflation remains a concern or that the Fed might continue to raise the interest rate, this could push the bond yields higher while pressuring equity markets. So for the Forex trader, the USD could strengthen if Kashkari signals support for further tightening or if he expresses concern about inflation staying high. For the economics, his outlook is inflationary pressure, unemployment, and the GDP growth will help economists gauge the Fed's future policy trajectory. And the next one, the FOMC members speak. So the impact is quite the same with the very first event, that's from low to moderate. So the market impact for the investor, any hints of hawkish stance favoring interest rate highs could lead to the sell-off in equities, as a higher interest rate tend to reduce the value of future corporate profits. And for the Forex trader, the USD could strengthen if Smith back more aggressive tightening, particularly if this view diverge from more dovish member of the FOMC. And for the economists, this view will be essential in determining the Fed's consensus, and especially if the inflation remains persistent. And the next one is the NZD trade balance. So the impact is moderate, it shows as the orange flag. So for the market impact for the investors in New Zealand equities might take this as the mixed signal. On the other hand, the narrowing deficit is positive, and however, the persistent trade deficit suggests ongoing external economic challenges. And for the Forex traders, the smaller trade deficit than expected is generally positive for the NZD. If the country is importing less than exporting more, this could indicate a strengthening external demand for the New Zealand goods, bolstering the currency. However, the continued deficit may limit any significant NZD rally. And the next one is the FOMC daily speak. And for this one, it's the same for the very first two events. Is low to moderate, show the yellow flag. For investors, that if daily emphasizes the labor market is strength, this could taken as a signal that further tightening is necessary to control the inflation. Equity market may react negatively if the prospect is of higher later blooms. For the forex trader, the USD could rise if daily suggests that the Fed will remain hawkish and supporting the tighter monetary conditions. The next one is the public sector net borrowing. So it will show the moderate impact, showing an orange flag. For investor in the UK government bonds will be watching this feature closely. A higher borrowing requirement might push the bond yields higher as the government needs to issue more debt, putting downward pressure on the bond price. And for the forex trader, the GBP may weaken if the government borrowing the level rises substantially, as this increases the concerns about the fiscal sustainability. However, the actual figure may lower than the forecast, so potentially offering more support to the pound. And the next one is foreign direct investment. So it will show is the moderate impact. And for investor, the high FDI inflows are positive for China's economy, as they signal international confidence in the China's long-term prospects. This could boost the Chinese equity markets and provide support to yuan. And for the forex market, the FDI data directly impacts the yuan, and a strong inflow signal increased demand for the Chinese currency. Conversely, quick FDI could indicate investors concerned about China's economic stability, potentially leading to yuan depreciation. And the next one is BRICS UMIC, and it shows the high impact. For investors, they should closely monitor any announcement regarding the trade cooperation, developing financing, or alternatives to the US dollar. They move forward the dollarization or deeper economic ties between these countries could shift to capital flows. For the forex traders, the currency BRICS nation could be affected by any major announcements, especially regarding alternatives to using the US dollar for international trade. And the next event will be handled by Mr. Tim.
Okay, I will start with a news for Canadian dollar. This week we have a very few important news of Canada dollar, starting with the IPPI monthly, with the actual digits of negative 0.4%. This news is quite have a medium impact to the financial market. We'll see that it have a yellow flag, which indicate the low to moderate. The detail of this news is the Industrial Product Price Index. EPPI measure change in selling prices of goods produced by Canadian manufacturer. A negative number indicates the deflationary pressure in the industrial sector. We can see the market impact for investor. Lower industrial price might signal weaker demand in the industrial sector, potentially weighing on Canadian manufacturing stock. For trader, especially for trader, the Canada dollar might weaken slightly on this data if trader interpret it as a sign of deflationary pressure. However, the improvement from the previous month could limit any major reactions. And for economists, the deflationary trend in industrial price are a concern as they can signal a slowdown in economic activity. Economists will monitor whether this deflation is temporary or a part of a larger trend. For the next news on Canada dollar, we will see the RMPI monthly. We have the actual data, which is negative 1.7%. It's also a medium impact news, which have a yellow flag on the financial calendar. This news indicate the raw material price index, measure the price change in raw material purchased by manufacturer. A negative reading reflect falling prices, which can signal a lower demand on oversupply of raw material. They would have some impact in the market for investor. Lower raw material price could negatively affect resource-based sector such as energy and mining. However, cheaper input costs might benefit a manufacturing firm that rely on this material. And for Forex trader, the Canada dollar could see some downward pressure due to the weakness in raw material prices, particularly if Canada resource-heavy economy is seen as struggling. For economists, the continued decline in raw material price raise concern about deflation and global demand. Economists will be watching closely to see if this trend continues and what is signal about global economic health. This week we also have the POE government barely speak of the pounds of England. This is a very important news for pounds. It's a high impact news. The Mr. Andrew Bailey, of the Governor of the Bank of England, had a significant influence on the financial market through his role in setting monetary policy. His comment can impact interest rate, inflation expectation, and market sentiments. Next up, we will have the MPC member Queenie speak. It's also have impact on the pounds of England. The first, it only has a medium impact. This, as a member of the Bank England Monetary Policy Committee, Queen's view on inflation and interest rate can offer important clues about the future of the monetary policies. Next up, we will have the FOMC member Harker speak. Mr. Patrick Harker, president of the Philadelphia Federal Reserve, had historically leaned toward a more neutral stand in terms of monetary policy. However, his comment on the labor market, inflation, and future rate hike can move the market also. And next up, we will have the Richmond Manufacturing Index. This will impact the USD dollar. The Richmond Manufacturing Index measures the health of the manufacturing sector in the Richmond Federal Reserve District. Until the number remains negative, the slight improvement suggests a marginal recovery in the sector. We also have the IMF meeting this week. This is a very important meeting that could affect the financial market. The International Monetary Fund (IMF) meeting brings together the central banker, finance minister, and economists from around the world. Discussions typically revolve around global economic challenge, debt, and fiscal policies. Overall market impact this week, the USD Several FOMC member speeches could provide a critical insight into future rate hike hawkish rhetoric from any of the speakers might lead to the USD strength. While dovish remarks could provide relief of the equity market, the Richmond Manufacturing Index top improving slightly remain in contractions, suggesting a weakness in US dollar manufacturing sector. For the pound, the Bank of England Governor Andrew Bailey's speech combined with public sector borrowing data could move pound significantly if Bailey signaled further tightening to combat inflation. The pound may strengthen, but concern about high government borrowing could weigh the currency over time. So that is the summary on this new financial calendar. Thank you for listening.
Thank you Timmy and Sharon for such a detailed insight of today's calendar, and thank you all for audience for joining us today. We hope this session has been informative and that you are excited about the opportunities at WeMasterTrade as we are. And remember to like, subscribe, and this share this live stream with others who might be benefit from it. And don't forget to follow us on our social media platforms for more updates, promotion, and trading tips. So stay tuned for our upcoming events, and we'll look forward to seeing you again soon. So until next time, happy trading.
What is the Multi-Level Affiliate Partner Program? This is a 3-level passive commission program from WeCopyTrade. And here is an example. Jack is an affiliate partner of WeCopyTrade. Jack will look for new customers. Every time there is a direct customer, Jack will receive a 15% commission added to his account. And this is Leo. Leo is the sub-affiliate partner of Jack, level 1 partner of Jack. And this is Eric. Eric is a sub-affiliate partner of Leo as well as level 2 partner of Jack. After finding some sub-affiliate partners, Jack will receive commission from Leo and Eric. After Leo gets new customers and receives commission, Jack will also get 10% on the amount of commission Leo receives. After Eric gets new customers and receives commission, Jack will also get 1% on the amount of commission Eric receives. Thanks to the system of multi-level commission, Jack will always receive a great deal of commission every time AP subs successfully attract new customers. WeCopyTrade, the only platform that pays passive commissions at 3 levels to affiliate partners.
WeCopyTrade.
John always wanted to invest, but because he works full-time at the office, he never found enough time to learn how to do it. He missed out on investing in Amazon. He missed out on investing in Bitcoin and gold.
Because he didn't understand the market. But now, he started trading because he found WeCopyTrade.
It is a social network for traders that allows him to skip the years of learning the financial market and copy the most successful investors. He checks top profiles to see their success rates, returns, and risk assessment, and then he chooses to copy. It automatically mirrors all of their investments. So if they get a 10% return, he gains a 10% return as well. Investment news will be updated and shared on the Traders Community and Social Network so that he can keep track of all the market information.